You're listening to the Financial Source podcast on YouTube.
Welcome to today's deep dive. I am so glad you're joining us because today we are looking at how just a few geopolitical words can cause a massive, a double-digit shockwave across global energy markets.
Yeah, it's a wild day in the markets.
Right. We've got a stack of raw financial market analysis notes right in front of us, and our mission for this deep dive is to translate these rapid-fire market movements. So looking at everything from plunging oil to shifting currencies.
Really just trying to get a clear picture of what is actually happening globally today.
Exactly. Okay, let's unpack this. We need to start with the most dramatic data point, which is oil prices taking an absolute nosedive.
Just falling right off a cliff.
Yeah, I'm looking at futures for WTI in April 26 dropping 10.4%.
Wow.
And Brent for May 26 falling 10.3%. That is a massive drop for a single session.
What's fascinating here is the dual catalysts driving this plunge. It isn't about, an immediate physical glut of oil suddenly arriving at global ports.
Right, the actual physical supply hasn't changed yet.
Exactly. Instead, it's being driven by the upcoming G7 energy ministers' talks, coupled with U.S. President Trump stating that the war could end very soon.
So it's literally just words.
Just words. But when rhetoric like that hits the wires, algorithmic trading often triggers stop losses instantly, causing prices to cascade.
Oh, so it's sort of like hitting the brakes in your car just because you saw a shadow on the road?
That is a great analogy. The physical obstacle isn't actually there yet, but the market's reflexes just kicked in violently.
Okay, so if oil is reacting that violently to just the possibility of de-escalation, how are traditional safe havens holding up?
Well, that's where the data gets really interesting.
Because I'm looking at the U.S. dollar index, the DXY, and it barely moved. It only managed to eke out a tiny 0.1% gain after a recent retreat.
Very muted reaction.
Right. And we saw a slight dip across almost all major currencies against the dollar. The euro, the pound, and the Aussie dollar all slipped about 0.1%, while the New Zealand dollar dropped 0.3%. Meanwhile, the yen just stayed completely frozen against the dollar, flat.
If we connect this to the bigger picture, you can clearly see the geopolitical threads pulling at these currencies.
How so?
Well, the dollar typically acts as a safe haven during times of global conflict. But Trump's comments, specifically those regarding Iran and the potential for the war to wrap up soon, actively dampened that haven appeal.
Oh, because the perceived threat level just ticked down.
Exactly. Investors are pulling back on their defensive positions. That softer haven demand is exactly why we are seeing softer yields and such muted fractional gains for the dollar today.
Okay, I get why oil is dropping on peace talks and why the dollar is softening, but I'm looking at this data on bonds and it looks like a sea of green.
It really is a big shift.
We've got German bonds up 43 ticks, Japanese government bonds up 17 ticks, and U.S. Treasuries up 7 ticks.
Right.
At the same time, metals are seeing a bump. Gold is rising 0.6%, and copper is up 0.9%. Why would all of these spike on this news? Are traders just parking their money while they wait to see what happens?
It's more than just parking money. It's a massive, aggressive repositioning.
Aggressive in what way?
To give that data some context, seeing German funds jump 43 ticks is a massive daily move that shows just how aggressively European markets are bracing for this shift.
And what about the metals?
Well, that bump in copper. An increase of 0.9% often points to traders looking ahead and anticipating post-war rebuilding efforts.
Which require massive amounts of industrial materials.
Exactly. You synthesize all these data points together and you see a highly reactive market balancing the optimism of potential peace agreements against the reality of shifting global yields.
So what does this all mean?
It shows the sheer power of narrative.
Ultimately, today's data proves just how incredibly sensitive global markets, especially energy and safe haven assets, are to political rhetoric and the prospect of conflict resolution. They aren't just trading on physical goods moving on ships and trucks, they are trading on words.
And it leaves us with an incredibly important question to ponder. If a single public statement about a war potentially ending can instantly wipe out 10% of oil's value on the market, how much of the energy prices you pay every day are based on actual physical supply, and how much is just pure geopolitical psychology?
That is a very expensive question to think about the next time you're at the pump. Thank you so much for joining us for this deep dive, and we will catch you next time.